Hi, I'm James Robinson, and this is my stock pick of the week. This week's stock is Cisco, symbol CSCO. To be fair, I actually bought this stock back on May 5th, and I bought it for $41.58. I posted it on Twitter when I bought it, but I haven't got around to doing a video. I've been busy with some other stuff. But now we're going to talk about the company, hopefully get up to speed. Stock's gone up a little bit since I bought it, but I think it's still a very good buy. Before I get started, I'd like to suggest that you follow me on Twitter. My handle is @RobinsonStocks. The reason to follow me on Twitter is I don't always have time to make videos at the exact moment that I buy a stock, but I will always post on Twitter when I do, and then I get around to doing a video when I can. Hopefully it's less than a month. This time it's been a little longer because some things going on. But if you follow me on Twitter, you'll also see articles related to our portfolio. You'll find out in real time when I buy stocks and when I sell stocks. You'll also get news and other thoughts for stocks that we might own, or stocks that I'm considering buying, or just things that I think you might find interesting. So go ahead and follow me there if you want to. Thanks. So I will do a 5-part deep dive into Cisco, and we'll look at an overview, which is this video. We'll then do one on the operations for the company, one for the company's balance sheet, one on dividends for the company, and finally one on wealth creation, which is how good a job the company does in returning wealth to the shareholders. So as I do with every company, I look at a company in 29 broad areas and broad categories and statistical analysis of a company. 9 of those categories have to do with the company's operating capabilities, which is how well and how efficiently the company delivers goods and services to the customer. 10 of those categories have to do with financial issues, which is the cash on hand, the company's debt, how well the company's debt is being managed, what the balance sheet looks like, things having to do with simply the company's strength and or risk assessments related to the company's debt. The final thing I look at is management, and I think management's key job is to return wealth to the shareholders. So when I say I look at the company's management, what I'm really saying is this company maximizing the return that the shareholder, get from being a stockholder? So when you look at this company, you can see that it's in extremely good shape in terms of management, amongst the highest of any company that I've looked at. It does a very good job in terms of finance. It has some debt, but not very much. And while it has $14 billion in long-term debt, relative to the scale of this company and relative to the company's profits, it's really not very much. So the company has very little debt relative to the size of the firm. The company's operating assets at 3.11 are, they're acceptable. I would look at this company if every category is 3.11. But because of the other 2 categories, I would consider this stock to be a very long-term hold. This is not something I think I'm going to buy, make 15 or 20% and sell. I think at this price, I might hold this for several years. It is the 24th highest rated company out of the 927 companies that I've looked at. So these kind of companies don't go on sale very often. This company is on sale, and it is something you should consider buying. It's not going to be a home run like we did with Children's Place or like we're doing with Ventus. It's just going to kind of be a chunk and make us money every year kind of company, I believe. So that's a look at these systems, and you can look at these numbers category by category. Pause the video if you want. And again, I'll go more into depth of each of these. I have a video on the operating, I'll do a video on financial, and I'll do a video on management, which is wealth creation. So you'll get a deeper dive into all those categories as I go on. So this is as of June 2nd, 2020, which is, again, I bought the stock back on May 5th. The company has a market cap of $198.2 billion. It has revenues of $51.99 billion. It has profits of $11 billion. It has a PE ratio of 18.61. Pays a dividend of 3.07%. And the company has long-term debt of about $14.4 billion. So what does Cisco do? Cisco designs, manufactures, and sells internet protocol-based networking and other products related to the communications and information technology industry. Effectively, they're the backbone for the internet. They sell in the Americas, Europe, the Middle East, Africa, Asia, Pacific, Japan, and China, so pretty much they sell everywhere. They provide infrastructure platforms, including networking technologies for switching, routing, wireless, for data centers, products that are designed to work together and deliver networking capabilities and to transport and or store data. So again, it's a really complex way of saying they're the backbone and the mechanical infrastructure, the hardware infrastructure for the internet. The company also offers collaboration products comprising unified communications, Cisco telepresence and conferencing, as well as Internet of Things and analytical software. They provide security products such as network security, cloud and email security, identity and access management, advanced threat protection, and unified threat management products, as well as cloud and systems management products. Further, the company offers a range of services and support for their products and their customers that includes technical support and advanced services. It services businesses of various sizes, public institutions, governments, and service providers. The company sells its products and services directly, as well as through systems integrators, service providers, other resellers, and distributors. Cisco Systems was founded in 1984. Its headquarters is San Jose, California, and it has 75,900 employees. This is a very, very large company, and it's the largest company in the world, as far as I know, that does what it does. And it's, you know, if you're in the process of bolstering your ability to access and utilize the internet and your systems and your computers, you're likely to have Cisco products as at least a bidder, if not one of the products that you buy. So, by way of summary, Cisco's most compelling attraction to me is its wealth creation. This company does an excellent job. They pay dividends every year that go up. They buy back stock every year. They paid off about $10 billion worth of debt in the last few years. So it's all really good things for shareholders. And so this company does a good job of making money, and then they figure out a way to get it back to us, the shareholders. The company has $14 billion in long-term debt and $11 billion in earnings. So nothing. You know, the debt is in no way a trouble spot for this company. They have a good return on assets, adequate return on equity. They have a very low retained earnings, which I like. They don't need to reinvest a bunch of money back in the company. It's a very dominant player in a very dominant industry. Again, the one downside is the operations are good, but they're not excellent. So that's sort of the summation on Cisco. Also, you should know there is two Ciscos. One, which is CISCO, another one which starts with S, which I believe is SYSCO. The Cisco that starts with an S is a food processing company. They sell to restaurants, and I suspect it's a very bad investment right now. I haven't done the analysis, but when you look at these, especially if you're not an American, and it's maybe not second nature to know Cisco, make sure that you're not buying the wrong one. Make sure you're looking at the one that starts with a C and the symbol is CSCO. Thanks. I look forward to I hope you follow the other videos. And if you like this video, please subscribe and like. That's how we try and grow the website, or grow the YouTube channel. Thanks a lot for your time.